Thank you for joining us to watch realestateinvestorsdashboard.com video tutorials. Real Estate Investors Dashboard is the website where investors help investors to make profitable, well-informed decisions when investing to real estate. In this tutorial, we are going to discuss cash flows, risks, and opportunities in our real estate investment. Risks and opportunities are usually one-time events, or they happen not regularly, like mortgage payments or insurance payments. Risks suggest decrease in positive cash flows, for example, costs associated with a roof repair, when opportunities are related to increase in positive cash flows. Example could be expected vacancy that didn't happen, and we have increased our rental revenue in our project. Now let's quickly review high-level profit and loss statement we discussed in previous tutorial. Top line is a rental income of $10, that is money paid by our tenants. Less operating expenses of $4, that is cost investor incurs to maintain the property. Rental income minus operating expenses equals to net operating income. In our case, it's $6. These are money to cover our financing costs, that is mortgage payments. Our financing costs in the example $3, so net operating income minus financing cost derive net income from rents, that is $3. Next step, let's introduce risks and opportunities to each section of our profit and loss statement, that is income section, operating expense section, and financing cost section. The rules: we deduct costs associated with risks from rental revenues and added back savings associated with opportunities. Let me show example. Let's say we lost 1 month rent. We have income risk of minus $1 in our rent income section. On another side, we have to fix dishwasher, and cost associated with fixing is $2. So we have operating risk of minus $2 in operating expenses section. On financing cost section, we have opportunity to save money on broker fees of $1. So we added back this savings of $1. This results in new rental income of $9. New operating expenses of minus $6, net operating income equals $3. Financing cost was decreased by $1. We ended up net income from rents equals to $1. Using a risks and opportunities tool help us make our investment analysis more accurate. Now we're going back to Investors Dashboard website to find out how we can add risks and opportunities to profit and loss statements. Before entering risks and opportunities on Investors Dashboard website, let's download our project we saved on previous tutorial. We click on upper left corner to get user profile menu, and then click on Investment Projects, and click on our Toronto 1-bedroom condo. In input page, on the bottom, you will see a section called Risks and Opportunities. So far, we don't have any risks added to our project. We're going to introduce an opportunity to our rental income section of $420 in year 2016, year 2018, and year 2020. This opportunity related to absence of expected vacancy. So we click on More, and then click Add New R&O item, Risk and Opportunity item. No vacancy. This is the description for the item. Now I choose Type. This is Income Opportunity, and value is $420, and I expect this savings incurred in 2016, then I press and hold Control button, click on year 2018 and year 2020. Next step, we're going to introduce risk to our operating cost section. So I add new risks and opportunity item by clicking on this link. Let's say we have to budget $1,000 to repair doors, so I call it door repair. Type operating risk and value is $1,000, and we expect this happened in 2016. And let's introduce one opportunity to our financing cost section. Let's say we expect savings on interest payments of $300 in the year 2018, 19, and 20 due to interest rate decrease. So I click again on Add New R&O item. I call it Interest Savings. In the type drop-down menu, I select a financing opportunity. I enter $300. Again, I select year 2018 and then press and hold Control button 2019, 2020. Now let's check our project profit and loss with newly introduced risks and opportunities. So I click on Project Analysis menu and I'm clicking on Project and Profit Loss menu item. To get numerical data, I have to click on Tables. And what we see, we have opportunity on income section. $420 happened 2016, 18, and 20. Total $1,260 additional income to our project. On operating expense side, we have a risk of $1,000 to repair door, happened in 2016. So we have additional cost. And for financing expenses, we have opportunities of $300 happened during the last 3 years of our project. Total is $900 savings. Now let's go back to input page and let's say deleted our opportunity related to interest savings because I think it's too optimistic. So I click on Remove R&O item and this item is deleted. So let's go back to P&L and check it out. Project profit and loss. Click on Tables button and scroll down to see that I don't have any opportunities now in the financing expense section. You can edit as many risk opportunities as you want and they all will be sum up and the total will show in lines risks and opportunities in corresponding section of profit and loss statement. This concludes our presentation about risks and opportunities to profit and loss statement. We'll see you next time. Goodbye.